All right, guys, in this video, I'm coming up with 4 critical things that I believe are absolutely essential to pay attention to as a property investor. Doesn't matter what scale you're at, this stuff is critical. What's up, guys? Welcome back to another video on real estate investing from myself, Gavin Gallagher. I think it's important to pay attention to some of the things I'm going to talk about today because I've watched them impact my career, and so it's something that you guys can probably avoid yourselves. This applies to real estate investing, property development, and really any kind of financial speculation in general. When I look back on my career and the deals that did not work out as I expected, I notice now that there is basically 4 areas that I did not even pay any attention to it at the time. I call them the 4 E's of real estate investing. Now, despite what many of you might be thinking, these are not scientific analysis. These are not, metrics, or these are not financial sort of analysis and things like that. 2 of them are internal. You have complete control over them, but a lot of the time you're completely unaware of them. And the other 2 are outside, completely external, completely outside of your control. But the 4 of them together can really screw up your investment portfolio. What it all comes down to is understanding your strengths and weaknesses and having an idea about how human behavior and the cognitive biases that we have and the things that we do without even realizing that we're doing them. So let's get into them, shall we? Number 1, the ego. Number 2, your emotions. Number 3, the economy or the economics of the deal. And number 4, events. Getting into number 1, the ego. Now, the ego is a massive problem for so many investors up and down the pecking order. It doesn't matter whether you're a novice or whether you're a billionaire, you will be impacted by your ego. And it doesn't really matter whether you're a property investor or stock market investor, the ego has a big impact on your decision making and your way of processing information. When you're starting out as a novice investor, like if you're right at the very beginning of your career, you've never done anything, you've never bought anything, your ego is definitely going to be working against you insofar as you're lacking confidence. And if you're lacking confidence, then you're going to be hesitant and you're going to be slow to pull the trigger and actually put in an offer. You've just got to watch that. Like, don't sit on the fence for too long. You've got to find that point where you've done your analysis, you understand that the deal is right, you're now ready to invest. Now, on the opposite side of that scale is where the ego is overconfident, and that applies to me in a big way, or it did certainly back in the mid 2000s when everything was going great and I just started to get this sense that I could do no wrong. Every deal that I did kept on winning. Every deal that I did was just bringing in a profit, and so I got a little bit complacent. I started to pay a little bit less attention to my due diligence. I started to just get a little bit lazy. I started to go on gut instinct. You got to be very careful about that. That is where you're at your weakest, or certainly you're at greatest risk of making a mistake. So the way to avoid making these mistakes is just to try to take time to reflect on the decisions that you're making. Look at yourself objectively. Is your ego in check? Okay, number 2, we're going to talk about the emotions. Now, it is closely linked to the ego, but with the emotions, it comes into more your thoughts around falling in love with, say, a deal, falling in love with, say, a property that you have your eye on. If you fall in love with a property, you're going to be spotted a mile away by the agent who's working for the other side, and that is going to give them an opportunity to pump up the price. Second of all, if you are emotional about selling a property, if you get yourself into a situation where you've emotionally locked in on the price of your property, that applies also when you happen to receive, say, an offer that is below what you want. I can remember receiving offers and feeling like it was an insult to me that this offer was at the level that it was at. You might be receiving a fair offer, but you don't read it like that. You read it as some sort of an insult. You got to watch for that, and you've got to sit back and you've got to just reflect am I analyzing this correctly? What you got to remember is the property market is kind of this cycle, and think about a wheel of a bike going around and around. Now, if you're in for the long haul, as I hope most of you who are watching this video are, you've just got to understand that that cycle is constantly going, and over your career, the prices that you have are going to fluctuate. They're going to go up and they're going to go down. Demand will increase, demand will fall. You're just on this cycle, and you've got to have the resilience to weather that. Don't get hung up in prices. When it reaches its max, that is its max for a day, a week, a month, whatever it might be. It's not necessarily going to stay there. So don't get emotionally hung up on the maximum price. All right, number 3, the economy. One of the things that you've got to remember is that the price of your property is completely connected to the wider economy and the economic circumstances and the environment that you're in. Things outside of your control can impact all of that. For example, interest rates, they can start to spiral up. That's going to have an impact on your value, and it's also going to have an impact on your cash flow and your borrowing rate. Supply and demand is the next thing. Supply and demand changes over time. It's never static. There's often oversupply or undersupply, which has an impact on the demand. The market is constantly fluctuating. When you were buying your property, you assumed certain rents, you assumed certain interest rates, you assumed all of these things, but these things are fluctuating all the time. And so you just got to make sure that you're paying attention. The way to avoid getting into trouble with the economics of the deal is to always make sure that you've built in a certain contingency. One of the best ways to avoid getting caught by the economics of a deal is to analyzing your deals with different scenarios. You have your base scenario, that is prices today, rents today, interest rates today, construction costs today, whatever it might be, refurbishment costs, all of that stuff, that is your base case. Now take a look at the pessimistic side of the deal. Could be that interest rates go up, could be that construction takes longer than you anticipated. Have a look at all of those, make small adjustments, 5-10%, just see how it plays out on the overall metrics of your deal. You could find that all it takes is a small reduction in the rates for rent, and the deal doesn't work any longer. And finally, guys, number 4, and I'm going to talk about events. And by this, I think it's pretty obvious one of the biggest events that's impacted the whole market in general in the last year or so has been COVID-19. Events in your own life that are outside of your control can take place as well. And that might be like, for example, a health scare or some sort of a health issue. Things like that can happen and can suddenly catch you unexpected. It might be a family member getting ill or something like that. There's a thing called the normalcy bias. It's also called the continuity bias. You assume that everything's going great, and so it's going to continue going great. What people don't expect is for something to happen, some event, and the whole market, the whole world can change overnight. Now, these things can happen, and so it's often a good idea just to have a look at your deal in the event of, say, something bad happened. If this one deal didn't go right for me, would it pull down the entire portfolio that I have? Have you tied your borrowing into other assets? Just don't paint yourself into a corner is the best advice I could say. And by that I mean, leave yourself a little bit of wiggle room. Do any of these sound familiar to you? Do any of them resonate with you? If that's the case, leave a comment down below and just let me know which one resonates with you. Alternatively, just leave a comment down below with any questions or topics you'd like me to cover in future videos. If you found this video useful, please give us a thumbs up. And if you haven't already, hit subscribe. All right, guys, in this video, what's up, guys? Welcome back to another episode of Behind the Facade. What's up, guys?